Whether you're broke, in a dead-end job, or without a business, you already have the raw materials for the best money tree seed in existence. What is it? Guess. Real estate? An internet business? A network marketing company? Licensing an invention? No. No. Hell no. And no. The best money tree in existence sits right in your pocketbook, the good old-fashioned buck. Yes, money. Money is the king of money trees. How is money passive? If you have a lot of money, you're given the gate key to switch teams from consumer to producer. Specifically, you move from borrower to lender. You move from employee to employer. You move from customer to owner. In other words, people pay you to use your money in the form of interest or ownership. For example, let's examine interest, which is a fee earned to lend money. Right now you're probably someone who doesn't earn interest, but pays it. Someone lent you money for the mortgage on your home, and in return you pay the noteholder interest. That interest is profit or income to someone else. While the act of becoming a lender sounds complicated, it isn't. Anytime you buy a certificate of deposit from a bank, you become a lender. Anytime you buy a municipal bond, either directly from the source or indirectly via mutual fund, you become a lender. When you deposit money in the bank, you become a lender. As a lender, you don't administer the loans, you just sit back and collect checks. It's super easy and super passive. Gary, my rich limousine passenger, was a lender who never had to work another day in his life. Savers become lenders, owners, and producers. I heard a radio commercial the other day from a self-proclaimed double-dad guru who declared, "Savers are losers." I couldn't believe my ears. Savers are losers? And who are the winners? The people you advise to borrow millions on risky real estate investments? Savers aren't losers. Savers are winners because they eventually become lenders. Savers are winners because they become owners in companies. Savers are winners because they become producers and build assets. Open your wallet and look at $1. $1. It doesn't buy much, but it is the embryonic start to a passive income stream. $1 has the power to give you a nickel of passive income for life. Yes, for life. While 1 nickel buys squat, it unlocks the DNA implicit in money, it's fully passive. I retired in my 30s because of this simple reality. I'm a lender, and when you have a lot of money to lend, you live free because passive income arrives every month. If you had $10 million and lent it at a mere 5% interest, you'd enjoy a passive income of $41,666 every single month. At 8%, your monthly income would be $66,666 per month, fully passive. Over $60,000 every month. This is without touching the principal. You can do this for years and still have $10 million left over. Imagine opening your mailbox every month to a $40,000 check, and you didn't have to do anything for it. What kind of trouble can you get into earning $40,000 per month? I bet a lot. Unrealistic? It isn't. This is how I live. Even in this low-interest rate environment, I can find safe investment yields in the 4% to 6% range, some tax-free. While most people shudder at the thought of an interest rate increase, I love it. I get a pay raise. A 1% interest rate hike translates into thousands per month for me. And since inflation rises in unison with interest rates, my income has an element of inflation protection. If inflation rises, so do interest rates. So how does all of this become a reality? I created a passive income stream via my internet businesses, a business money tree seedling, which funded my passive income system from lending. While my internet business was 85% passive, yes, I had to work several hours per week, my lending passivity is 99.5%. I doverceli. Nothing and the checks arrive. Instead of trading my time for dollars, I invested my time into an autonomous system simultaneously capable of passivity and capable of funding my money system. It was a dual-flanked attack where passive income was both the short and long-term goal. Amass your army of freedom fighters. Every dollar saved is another freedom fighter in your army. If your money is fighting for you, your time is freed and you break the equation of time for money. Money is your army. The more you have, the more they will fight for freedom. Slow laners focus on the expense variable in the wealth equation when they should be focused on the income variable. Income is the key to growing your army of freedom fighters. You aren't going to recruit a massive army detailing cars down at the Jimmy's Auto Salon. And I'm not referring to just the US dollar, but all international dollar-denominated assets. As I write this, much of my income is derived from non-US dollar assets in other countries with stronger currencies and better yields. FastLaners. Think globally, not locally. What does a dollar represent to you? A mechanism that gets you bottle service at the club every Friday? Or is it the seed of your money tree? Is it your freedom fighter? Make money fight for you instead of you fighting for money. How FastLaners, the rich, use compound interest while examining the slow lane. I impugned a compound interest as an impotent wealth accelerator because of its attachment to time. When the slow lane media darlings read that assertion, I'll be crucified because lambasting compound interest is the pinnacle of financial blasphemy. But I also exclaimed it to be a powerful passive income generator when leveraged against large sums of money. Contradictory? Just like education, FastLaners and slow laners leverage compound interest differently. Slow laners, the middle class, use compound interest to get wealthy, while FastLaners, the rich, use it to create income and liquidity. Slow laners start with $5, FastLaners start with $5 million. Compound interest pays my bills. It's my tool. It's my passive income source. Yet compound interest is not responsible for my wealth. This is critical. FastLaners aren't using compound interest to build wealth because it's not in their wealth equation. The heavy lifting of wealth creation is left to their FastLane business. When a rich politician or public figure comes forth and discloses his finances, notice the common themes. The source of their wealth comes from their business interests, while their liquid cash reserves are tied into fixed income securities like municipal bonds, treasuries, and other highly liquid and safe investments. The rich aren't using the markets to create wealth, they're increasing their existing wealth with leveraged business assets. Remember, that 25-year-old multimillionaire who got rich investing in mutual funds is a fairy tale. The millionaires are the guys running the funds. They're the producers. How to really use compound interest? Would you rather have $5 million right now, or a penny doubled every day for 40 days? No brainer, right? You take the $5 million bucks. But that would be a serious mistake. Accept $5 million now and you forsake nearly $5.5 billion. That's $5.5 billion dollars. Examine the chart below that demonstrates the force of doubling. Now transform the previous chart and replace the days with years. Make day 1 a person, you, at 21 years old. The transformed chart is indicative of a slow laner's journey where compound interest doesn't enforce power until most of life has evaporated. Big money doesn't come until you are in your 50s and 60s, and this is with 100% returns year after year. Average market returns would be 7%. Yet at a doubling at age 40 you have barely $6,000. Again, this is the slow laner's predicament, imprisoned in time and uncontrollable yield. FastLaners understand this weakness and realize that compound interest weapon is most effective with large sums of money. For compound interest to be effective, you must bypass 30 years of mathematical ineptitude by riding the crest where it is effective. The tidal wave of compound interest, like a tidal wave far out to sea, compound interest's strength isn't visible until it moves near land. As the wave approaches land, its force becomes incredibly powerful. Most slow laners ride the compound interest tidal wave a million miles out at sea. And guess what? Nothing happens. They float aimlessly, going nowhere. 10% interest on $5,000 doesn't make millionaires. Saving $200 a month, the FastLaner observes the tidal forces near land and seeks to meet it at the shore. At the shore, the tidal wave can be ridden with impact. To actuate compound interest's power, start at the shore with a large number that can be leveraged. 10% interest on $10 million is $1 million a year, $83, $333 every single month. Exploit compound interest at its crest, not a million miles out to sea. The point of this illustration is to show that the rich aren't using compound interest to get wealthy, they're using it for income and liquidity. A 5% tax-free yield on $10 million suddenly creates a $500,000 per year passive income. Like a tidal wave at the seashore, compound interest rears excruciating force when pitted against large sums of money. This is where money transforms into a fully passive income stream. As for earning your $10 million, that solution lies in exponential leveraged growth stemming from a FastLane business, net income plus asset value, not in expenses, not in the stock market, and not in a job. Chapter Summary: FastLane Distinctions. One saved dollar is the seed to a money tree. A mere 5% interest on $10 million is $40,000 a month in passive income. A saved dollar is the best passive income instrument. Fastlaners, the rich, don't use compound interest or the markets to get wealthy but to create income and preserve liquidity. A saved dollar is a freedom fighter added to your army. The rich leverage compound interest at its crest, applied against large sums of money. Fastlaners eventually become net lenders. 21. The real law of wealth. Try not to become a man of success, but a man of value. Albert Einstein. EFFEC not attraction. The law of effect. Nope, not a misprint. Mathematics is the transcendent language of the universe. It cannot be controverted nor debated. 2 plus 2 equals 4. The number 10 million will always be greater than 24. These statements are facts and not subject to interpretation by some mystical theory of philosophy. Math is law. Secrets and mystical philosophies are not. If you want to get rich, start observing the true law of the universe, math, and not some hocus-pocus law that can neither be proved nor documented. Singing positive platitudes around the campfire isn't going to make you rich. Oh, don't get your panties in a wad. I know the law of attraction sounds great and has practical applications. For those not familiar with the law of attraction, LOA, it's a mystical philosophy that states you become what you think and that your conscious and unconscious thoughts make your reality. The LOA contends that if you know exactly what you want, ask the universe for it, see it coming, then you will eventually receive it. Think riches and you will have riches. Sounds easy, huh? I won't hide my candid sacrilege to the LOA crowd. I think it's a bunch of baloney orchestrated to sell books to those who think thinking it will make you rich. In fact, the LOA is nothing but old principles of belief and visualization repackaged and remarketed for mass consumption. Who are the true fastlaners? The LOA marketers.